This week, UK inflation hit 9.4%, its highest rate in 40 years. In America, it's 9.1%. And this week coming, Australia's inflation rate, now 5.1%, is expected to jump above 6%. But the Reserve Bank is already talking about 7% plus. Now, this inflation eventually has to erode parts of the economy, especially employment prospects. So let's bring in here Adam Creighton, Washington correspondent for the Australian newspaper and a contributor for Sky News. Adam, a lesson from you, if you will. In Australia, commonly I hear from the Reserve Bank Governor or the Treasurer that things are okay because record numbers have a job. But is there a lesson from the US that eventually this story changes if inflation stays too high?
Well, look, I think the lesson there is that if you go back through business cycles over the last 50 years, whether it's Australia or the US, you find that the unemployment rate increases extremely rapidly just all of a sudden. So it's quite often a signal, if you like, when you have a very low unemployment rate, that there's a high probability of a sudden rise in it. Now the immediate threat now, of course, is a sudden increase in interest rates, which we're seeing around the world, in the US, also Australia. Fears, as you know, that central banks might go too far. I know the Australian Prime Minister just said that recently in a veiled warning to the Reserve Bank not to increase too much. But as you suggested in your intro, there's always, there's a medium to longer term impact too of this structural increase of inflation on the economy. Now, it's interesting at the moment, you've got falling real wages at the moment. You've got a wage growth in Australia and the US that is lower than inflation, but it's possible that could turn around if you get a breakout in wages growth, which can happen at these low rates of unemployment.
OK, so then we get to a situation where you've got right now a case whereby you've got full employment and everybody says that's a fantastic thing to have. And it is, that's absolutely right. But if you don't have a pool of future employment, now in Australia that could come from borders being opened and immigration coming through the door, if you don't have that pool, then ultimately you've got to push up your prices. If you push up your prices, your businesses become less competitive. If that happens, eventually those companies make decisions about whether they need to employ labour or not.
Yeah, look, that's right. That's why economists traditionally have had something called the NERU, the non-accelerating rate of unemployment, and it used to be a lot higher than your 3.5% unemployment that you have now. It used to be 4.5% or 5% unemployment, and below that level, that's when economists would think at least that wages would start to rise, and those economic cycles that you were referring to would start. Now we're currently at 3.5 in Australia, 3.8 in the US roughly. So these certainly are levels historically where you will get rapid increases in wages, and we are seeing increases in the US of more than 5% in wages, nominal wages. That's the highest it's been probably for decades, I would say, and I assume Australian wage rises are getting up to 5% as well.
So I just get to this point because there's one other aspect of this, and that is that employers might in the future say, well, let's not employ more people, let's go to automation. And so it can actually drive productivity inside businesses, the fact that you've got very high wages. But of course, that's not so good for your housing market. That's not so good for retail sales. That's no good for your whole economy, even government in Australia, which collects more than half of its revenue from PAYG taxpayers.
Well, look, this is the great raging debate amongst the greatest minds about whether the labour force is shrinking over time because of technology. I mean, certainly you see in Europe where they have structurally very high unemployment rates, that's partly to do with the cost of labour. And you're quite right. In those countries, you see far more automation. I think France is a very good example. Labour costs there are so high. French companies tend to use as few people as possible. Now, that is good for firm level productivity, if you like, but of course it has social impacts when you have essentially permanent double-digit unemployment rate. So look, I think it's too early to say whether we're kind of entering that world or not. I wouldn't want to say that yet, but because people have been saying it's the end of jobs for many decades, and they keep bouncing back. So it's really too early to call on that one, I would say.
Many thanks. Talk to you very shortly.